Welcome to TheoTrade. This is Don Kaufman. August 25th, 2020. Minutes to go to the cash close here on this Tuesday afternoon with what? The upside chaos just continuing inside of the marketplace. And people, we are just down and divergent in every way, shape, or form. Let's get to work. Let's actually show you a little bit of what I see in this marketplace. And then more appropriately, we're also going to discuss how we're trading it right now. So as I said, some of the upside chaos. Listen, it's different day, kind of the same tune with the Nasdaq once again spurting to the upside. But as I kind of said also a moment ago, we're down and divergent. And what I was meaning by that is if you haven't looked at the advanced decline line, and I've been talking about this excessively lately, this is the S&P 100. We're in a negative advanced decline line. One of the most interesting things, though, about the advanced decline line, and I want to bring this to fruition here, is that when we opened today, at one point we actually had 76 advancers, right? So we had 76 advancers, obviously 14, 15 decliners in here, and that was with the marketplace down. In fact, the Nasdaq was actually down at that point when we had more advancers. We then rotated into the Nasdaq, and the advanced decline line actually came apart a little bit, and I'll show you some of those rotations this morning. Again, the Nasdaq opened weak, looked like the bidless beast was going to grip hold. We took off, and we actually had a trend day to the upside over here. But again, the divergence. Now, to talk about the divergence, we showed the advanced decline line. Let me also show you what's going on inside of the bond market. The bond market is well off some of the lows of the trading session. Nevertheless, the bond's getting whacked back in a fairly large way. Again, they recouped about half the losses here. I would not pay attention to the volume spike that you're seeing inside of the bonds. That is brought to you by the fact that there's a roll inside of the bond market right now. But here's the surprising thing. Right? So yeah, the S&Ps are up 12, but frankly, the S&Ps are just being dragged, kicking and screaming by the monsters of tech. The interesting thing today is with the bonds being down, as soon as bonds go down, for those of you that are a little bit newer to this, that actually drives the interest rates a little bit higher. And you can see quite the pop in interest rates today. By the way, this is 0.64% up to 0.68%. I mean, that's a few bips there to the upside. Nevertheless, the point that I'm making with that is you would have anticipated that the financials would have been the beneficiary. And here we come into the closing bell. All right, that's what I get, a bell and the end of a video game. Depends on which trading application you have open. I've got Tastyworks and I've got thinkorswim. I'm now effectively trading on both. But as I was saying, so the bonds are getting whacked back, which brings interest rates up, right? And the rates, they moved. Again, a lot of basis points, they moved in the last couple of trading sessions here. But the point being, the financials were not necessarily the beneficiary of this. And this is that kind of wild rotation that I was talking about a moment ago. If you take a look, the financials opened pretty much at their strongest, tick of the day, was right literally at the cash open. They slipped throughout the course of the trading session, and that took the advanced decline line down with it. So when you're looking at the advanced decline line ending negative, right, and yet the marketplace as a whole and the S&P still end up quite substantially, it's because, again, they rotated out of the financials, which, I have to almost shrug my shoulders at this one, throw your hands up in the air, because interest rates are going up. That's supposed to help the financials. People, again, you got some chaos, and that's why I called this, it's, upside market chaos that's continuing. The other interesting aspect today comes in the fact that the Dow. So the Dow had, well, a ton of announcements, obviously. A few stocks kicked in. ExxonMobil, you're out of the contest. Obviously, Amgen getting put in. That was the big winner on the day. However, if we do take a look specifically at the Dow, and we can look at the Dow, okay, you can see net not performing well. And that's because the Dow is still filled with, well, a lot of financial stocks in there. ExxonMobil also getting rocked and taking the Dow down a bit with it. In fact, the energy sector itself got rocked basically on that news from ExxonMobil getting booted from the Dow. Nevertheless, push all of that aside for just a moment. So we were looking at the bonds, the XLF, what really drove trade today. I'll tell you exactly what drove trade. Once again, it's the monsters of tech, but the rotation today was unusual to say the least. So Apple finished precisely where it opened, which was down about $4. All right, no surprise over there. Tesla got rocked at the cash open, ripped higher. Okay, ending just off the highs of the trading session. This was also under pressure, but you have to recognize that just the last couple of trading sessions, what's driven the Nasdaq in large part has been Tesla and it has been Apple. So they kind of rotated a little bit away from bidding those up. And today, once again, is Amazon's turn. It's everybody gets a turn here. So Amazon gets a little bit of bid under it. Facebook at one point was just exploding higher today. And again, you know, you can't think beyond, these are momentum trades. It's just, you know, every day we just momentum trades into, again, the next underlying. You know, for the most part, what they have to pick from is Microsoft, Apple, you know, Facebook. By the way, speaking of Netflix over here, which I just skipped over, Netflix has not been involved in anything in any way, shape, or form lately. But again, it's the same usual suspects. The other thing that is really kind of striking in the last couple of days, I want to bring this up because there's a lot of discussion right now about the market just almost like frothy, if you will, to the upside. Well, I was mentioning this in the weekend video, and I'm going to continue to kind of reiterate this. Volume in the overall marketplace. Let's look at the S&Ps for a second. So this is volume in the S&P futures. Now, you may not necessarily trade futures. The volume in there is not striking by any stretch of the imagination. But when you start looking at stuff like Apple, okay, there is actually some fairly substantial volume. Okay, it's in play, like you get it. If you look at Tesla, this is kind of a, you know, a humdrum kind of day in Tesla. The point of me, though, taking a look, again, the point of me taking a look at a couple of areas of volume here is what I have noticed in the last couple of trading sessions is pretty striking. They are trading the momentum stocks, your Facebook, your Amazon, your Google, your Tesla, your Apple, and nothing else on the screen is being traded. And I should say that nothing else on the screen is being traded. Okay, yes, there's still some action inside of Boeing, but once again, there is this tremendous concentration of liquidity into only a handful of products. It is like every professional trader is just gunning their algorithms directly for specific stocks, and all of the retail traders are just piling in. Anything, okay, that is off the beaten path, take a look. Like stuff like eBay, anything that's just not in play right now, it's just, there's no liquidity out there whatsoever. Even stuff like JP Morgan, all right? Stuff like Intel and Intel, okay? There's just nothing going on in most of these underlyings. So I was also digging into options activity. You look at stuff like Goldman Sachs, okay? A lot of these people, this one is actually, you know, more active than it has been, but some of this stuff is just barely trading. Okay, the only thing that seems to trade right now is the stuff that literally is in play, like Apple today, 1 million option contracts on it. Facebook obviously rocking. I mean, Facebook, okay, to see almost 1 million contracts trade and option contracts trade in Facebook, and that is what is making these underlyings parabolic. Now, okay, as I was saying, all right, we talked a little bit about Apple, Tesla, you know, the financials kind of surprised us. Obviously, the energy sector got whacked today. Not a lot of movement in terms of volatility. Net volatility is flat. How are we trading this? Okay, I'm actually using a couple of different strategies, and it's working and consistently working. One of those happens to be none other than gamma irons. Okay, right now, to give you an idea, I've got some gamma irons on inside of stuff like TLT. Okay, and all it is a buy-side iron condor. The specifics of the iron condor, though, which iron condor we're buying, okay, what are the strikes that we're using, how far out of the money, how far out in time, what's the probability in the trade, the nuts and bolts, what are we looking for in a percentage return. Okay, we have been hitting these things sequentially. So if I come over here to the spiders, right? So I've got another one on the spiders. I'm also laying these things all over in the QQQ. In fact, okay, within the QQQ, I have multiple gamma irons on kind of simultaneously. Here's one for October 2nd. Okay, we can actually pump out to the, here's one that's just about to come off the September 18th expiration, and so forth and so on. So gamma irons, which is buy-side iron condors. Why are we out there buying iron condors? And that has everything to do, if I take a quick glance at the auto expected moves. What this basically does is it shows you the weekly expected moves, okay, and it automatically puts those in there for you on any given underlying, of course, optionable underlying. And every time, of course, we crack outside the expected moves, it's opportunistic. And you can see there's a lot of cracks, okay, inside of the QQQ in recent weeks. Hence why I'm actually putting more allocation towards the QQQ at this moment in time. We crack outside the expected move. I'm just buying, okay, the outside of the expected move a couple of weeks out in time. Nevertheless, the gamma irons are working extraordinarily well. What else works in this kind of environment? Well, back spreads. Okay, back spreads, because when we do something that is unexpected and crack outside those expected moves, those back spreads can also be extraordinarily profitable. And last, but definitely not least, one of the strategies that I continue, okay, to kind of tout in here is risk twist spreads. A risk twist spread is an outside shot. Here's one inside of HYG. Again, I just love the way that Tastyworks displays this on the screen, because you can see exactly the strikes that I'm short, what I'm long, okay, what I'm short. This is, and again, the risk twist spread, and I'll bring back up thinkorswim for just a second. A lot more people might be familiar with this. Apologize. I should be putting in HYG, not risk twist spread, but I have also been executing this particular strategy over here in thinkorswim, and what it's designed to do, all right, is take away, just away, outside shot here, okay, inside of HYG. And the reason I'm going into HYG, which is junk, is simply because it has an incredibly, just an incredible correlation with the spiders, the S&P 500 recently. So if the spiders were to get hit and to tank, the HYG very likely would also feel some of that pain. And the volatility inside of HYG is all the way down to 17.5%. all the way out in the December timeframe. If you look at the spiders in the exact same time frame, it'll cruise out to the spiders, the same expiration there, December expiration, it's all the way at basically 30%. So what would you rather pay for? Almost 30% implied volatility or 17% implied volatility? Hence, I'm actually moving into HYG, again, HYG, to turn around and to purchase that risk twist spread. This is a really inexpensive, just shot in the dark to the outside, and I love taking these, okay, kind of outlier shots, especially all the way out in December. We're going to go through the election. We're going to go through umpteen, degrees of news and Fed that's going to be implicated in this marketplace. Well, later this week, of course, we're going to hear from Jerome Powell on Thursday from the Jackson Hole Symposium. With that, again, more upside chaos. It's the same story, different stocks. The Nasdaq continues just to drag the S&Ps, kicking and screaming higher. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.